In this video we are going to talk about 10 dividend stocks that will pay you while you sleep. So before starting, please like this video and subscribe to this channel for our future updates. Market volatility is normal in the short term. Stocks, on the other hand, outperform other financial assets such as bonds and cash over time. When interest rates are low, this is especially true. Government bonds and savings accounts pay such low interest rates that they are unable to generate adequate returns or meet retirement needs. As a result, investors are turning to dividend equities to fill the income gap. However, not all income stocks are created equal. These businesses frequently have shaky financials and struggle during downturns or disruptions. Several former dividend stalwarts had to lower or abolish dividends due to the COVID-19 outbreak. Today, don't only go for the highest yield. It's vital to think about both current and future revenue. These 10 dividend stocks to buy in 2022 can provide a portfolio with income. Number 10. South Jersey Industries Incorporated, SJI. South Jersey Industries is the largest dividend stock for 2022 from west to east. South Jersey is primarily responsible for two of New Jersey's gas utilities. One, as the name suggests, covers the southern part of the state. The other is about the suburbs of New York City. South Jersey moves at a leisurely pace. In comparison to New Jersey, population growth in South Jersey is sluggish. Most income investors, on the other hand, are unlikely to mind. In South Jersey, a PE of less than 15 is considered a steal. The shares offer a 5% dividend yield till 2022. The stock is currently trading at a 15% discount to its 52-week highs, making it a strong buy. Number 9. Northwest Natural Gas Company, NWN. Utilities aren't the most exciting investments. At cocktail parties, no one talks about power corporations. Dividend investors sometimes ignore alternative income sources. Northwest Natural is another dividend king, having increased its dividend for the past 50 years. The natural gas utility established in Portland, Oregon, has benefited from the recent economic and population expansion in the Pacific Northwest. Utilities underperformed the market in 2021. Concerns about rising interest rates caused investors to discount utility equities. Northwest Natural stock, on the other hand, is down over 30% from its pre-pandemic high and pays a 4.1% dividend. That should be enough to sway some income investors away from bonds and bank CDs. Number 8. 3M Company, MMM. 3M is the definition of a dividend-paying corporation. 3M is best known for its Post-it notes, but the company also manufactures a variety of consumer and industrial products. 3M makes insulation, lubricants, medical supplies, personal protective equipment, dental tools, and cleaning supplies, among other things. Because of its diverse product line, 3M is a fantastic opportunity to invest in the American economy as a whole. 3M's tremendous diversification makes it a cornerstone portfolio asset as revenues and earnings continue to grow decade after decade. As a result, it has raised its dividend for nearly 50 years in a row, making it one of the few dividend kings in the world. The current yield on the stock is 3.4%. Number 7. JP Morgan Chase & Company, JPM. It may be too late on the list of the best dividend stocks for 2022. After all, JP Morgan stock has increased by more than 25% in 2021, and it is on track to set a new high. The main business of the largest U.S. bank has increased significantly over the same time period. JP Morgan Chase is thriving thanks to a booming real estate market, increased stock market activity, and lower interest rates. Banks, both retail and investment, are doing well. The bank is still trading at a low 10 times current year earnings multiple. Jamie Dimon, JP Morgan's iconic CEO, adds to the company's allure. A 2.5% dividend is also paid on the stock. Number 6. Raytheon Technologies Corporation, RTX. In addition to Raytheon, United Technologies and Raytheon were merged to form Raytheon. This corporation gave birth to businesses such as elevators and air conditioning. Raytheon's focus has shifted to aeroplanes, drones, satellites, and cybersecurity. Due to the slowdown in the defense industry, Raytheon's stock price has fallen substantially below that of the S&P 500. Raytheon isn't just a defense contractor, it's also involved in commercial aviation and space exploration. Earnings are expected to grow at a double-digit rate in the future, according to analysts. The RTX stock also has a 2.4% yield. Number 5. Lockheed Martin Corporation, LMT. In 2021, the military industry had a dismal year. As a result of the Biden administration's decision to leave Afghanistan, investors sold off the sector. Despite this, Lockheed Martin continues to secure new government contracts in the United States and abroad, solidifying its position as one of the best dividend stocks to buy in 2022. Lockheed Martin was just given a $9.4 billion deal by Finland for 64 F-35 combat planes. The stock market, on the other hand, is still in a downward spiral. According to the environmental, social, and governance movement, many institutional investors are no longer prepared to buy companies that make weaponry. Ordinary investors have a lower entry point because institutions avoid military contractors. Lockheed Martin has a 3.2% dividend yield and is valued at less than 13 times expected earnings. Number 4. Intel Corporation, INTC. Investors don't often think of technology businesses as large dividend payers. However, there are major exceptions, particularly in larger IT firms. Intel is a cash cow thanks to its massive and dependable semiconductor industry for personal computers and data center machines. While these markets aren't particularly fast-growing, they are stable enterprises that have profited from pandemic-related demand. Meanwhile, Intel has diversified into other, more futuristic industries to augment its main business, taking advantage of its large profits. Mobil, the company's self-driving unit, is one of them, and it's a big driver for 2022. After the company is spun off as a public corporation, Intel hopes to hold a controlling stake. Analysts estimate that Mobil is worth $50 billion or more as a standalone firm, reflecting a significant return on Intel's $15.3 billion purchase price 4 years ago. As a result, Intel's capital expenditures will be lower, allowing the company to reinvest in its core business or return capital to shareholders. Intel pays a 2.7% dividend today. Number 3. Toyota Motor Corporation, TM. Most auto stock traders have been focusing on electric vehicle, EV, businesses in recent years. That's understandable given the flurry of activity and new product introductions in the rapidly growing electric car market. On the other hand, traditional automakers should not be disregarded. These businesses already have large customer bases, dealer relationships, and supply chain and logistical footprints all over the world. In terms of electric car capability, some are even rather advanced. Toyota, for example, debuted the Prius, which was one of the first truly successful hybrid vehicles. Toyota announced earlier this year that it expects to offer 15 electric vehicles by 2025. It will also invest more than $3 billion in American battery manufacturing facilities. Toyota will undoubtedly play a significant part in the next generation of vehicles. Toyota, on the other hand, is already a tremendously profitable corporation, trading at barely 10 times earnings. Furthermore, the stock yields a good 2.5%. Number 2. Enbridge Incorporated, ENB. Oil and gas companies aren't the only ones benefiting from the energy industry. Storage, transportation, and distribution of crude oil, natural gas, and refined commodities are all handled by midstream companies. Although Enbridge is not a household name in the United States, it is a blue-chip stock in Canada and the fourth largest holding in the MSCI Canada ETF, EWC. Enbridge owns one of the largest pipeline networks in North America and has been paying dividends to owners for decades. The company did not reduce its dividend during the recent COVID-19 downturn. In fact, it has increased it considerably in recent years. While the price of oil and gas fluctuates, pipelines remain relatively stable. Enbridge delivers a 7.2% dividend yield to its shareholders. Number 1. Exxon Mobil Corporation, ticker, XOM. The major oil and gas companies have had a trying 7 years. To stay afloat after the oil price plummeted in 2014, most energy companies have had to reduce their dividends. Exxon Mobil was the one exception. Despite a temporary reduction in income, management kept its large pay package. Exxon Mobil also continued to make significant investments in new oil, gas, and refining projects. Exxon's offshore Guyana oil field, in particular, has established itself as one of the industry's most valuable new energy assets. Because it invested throughout the business cycle, while most of its competitors pulled back, Exxon Mobil is well positioned to benefit from the current spike in oil prices. The income appeal of Exxon Mobil, on the other hand, is as great as ever. Even if oil prices fall below zero in 2020, the dividend is assured, and the stock yields a robust 5.7%. What do you think about our video? Please let us know in the comments area below. If you enjoyed this video and would want to hear from me again, please subscribe and turn on the notification before leaving. Thank you for watching us.